Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq 100. We'll also take a look at probability for future interest rate hikes. Ryan, it's great to see you again, as always. Welcome back to Trade Talks, and certainly it continues to be active in the Nasdaq 100. What stuck out to you over the past week?
Yeah, it has been, and great to be back, Jill. We saw another week of outperformance, right? With QQQM and QQQ up 1.14%, outperformed the S&P 500 up 49 basis points, and S&P 500 value up 40 basis points. We saw a big move on Thursday. That was after a release of import price data. Basically, I think the street read as progress in the fight against inflation. We also got advanced retail sales for May, unexpectedly jumping by 0.3%. Kind of showcasing the resilience of American spending. Economists had forecast a drop of 0.2%. That being said, you're still seeing a slowing pace of retail sales, some warning signs about the health of the consumer, and manifested itself today with FedEx's disappointing 2024 outlook. They kind of cited declining delivery demand. So, I think the number at face value looked okay, but you're starting to see some cracks.
So let's talk about that, the probability of interest rate hikes going forward. Employment's still strong. We're seeing consumers slow down a bit. FedEx, it's always been one of the barometers when you take a look at earnings. What does that suggest to the Fed? Is their strategy working? We know they paused, but it was a hawkish pause. What are your thoughts?
Yeah, I mean, that's it, right? It's this continuing kind of like walking the tightrope of do they push the economy into a recession, which was their base case, or is we're going to engineer a soft landing? And Chairman Powell today was testifying in front of the House Financial Services Committee, and you have folks like Senator Warren grilling him on the potential negative impacts of higher rates, including putting potentially millions of Americans out of work. Ultimately, I think that you had a very similar message to last week, right? Kind of reiterated the fact nearly all FOMC participants found it appropriate to raise interest rates further at some point this year, or by the end of the year, I should say. Continues to reiterate in caution around a weakening labor market, continues to talk about lower economic growth, and now kind of talking about the speed of rate hikes less important as it was in the beginning of the rate hiking cycle. So to your point, yes, a hawkish pause. Could we see another pause? Yes, I think that would certainly be on the table at some point this year, and notes that it's going to continue to be data dependent. But I think from the street's perspective, they slightly increased their expectations for a rate hike. So it's around 72% in July. It compares to 62% last week, and a peak rate to touch 5.32%. That's up from 5.26% last week. So really implying one more rate hike. We still kind of see that disconnect because that's still below the Fed's dot plot target, which is calling for 2 more hikes before year end. At any rate, we're seeing growth stocks under pressure today. Nasdaq 100 at one point was lower by 1.6%. Markets, they've come back off the lows. I think as of about 10 minutes ago, Nasdaq 100 was lower by about 75 basis points. So we'll have to see tomorrow. Chairman Powell's testifying in front of the Senate banking panel. So we'll see if any other tidbits come out from that.
And what can you highlight in terms of sector performance for the week?
Yeah, so the relative outperformance, biggest drivers were QQQM's overweight to tech. It's underweight to energy relative to the S&P 500. That was the only sector within QQQM or QQQ in red for the week. Relative to the S&P 500, all QQQ sectors outperformed their counterparts with the exception of consumer staples. And from a single security standpoint, NVIDIA and Tesla were the biggest contributors to relative performance, each stock continuing their respective charge and ending up over 6% for the week. We did see an index change this past week. So during the past week's quarterly rebalance, Rivian was deleted from the Nasdaq 100. That was after its weight in the index fell below 0.10%. For 2 consecutive months, and it was replaced by ON Semiconductor. That's really the second change in 2 weeks after Fiserv was removed from the index earlier in the month. That was after it changed its listing from NASDAQ to the New York Stock Exchange, and that was replaced by GE Healthcare on June 7th. On Semi is a graduate of the NASDAQ Next Generation Index, which is tracked by Invesco's ETF QQQJ. And GE Healthcare was a spinoff from GE that was completed in early January of this year. So was not eligible for inclusion in NASDAQ 100 or Next Gen at the time of the 2022 annual reconstitution.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.